Bitcoin is not an investment, it's a savings account. And in this video, I want to explain this topic a little bit further. Let's get started. I want to start off with the definition of savings from Investopedia. We can see here savings refers to the money that a person has left over after they subtract out their consumer spending from their disposable income over a given time period. Savings, therefore, represents a net surplus of funds for an individual or household after all expenses and obligations have been paid. Savings therefore represents a net surplus of funds for an individual or household after all expenses and obligations have been paid. Savings are kept in the form of cash or cash equivalents. As an example, you have bank deposits, which are exposed to no risk of loss, but also come with correspondingly minimal returns. Savings can be grown through investing, which requires, however, that the money be put at risk. A lot of people confuse investing and saving because today we use investments as a savings account. We use stocks, index funds, for example, as a savings account. People just blindly buy the S&P 500 because they expect that the value will continue to go up forever. People just buy houses blindly because they expect, again, that they're going to get cash flows forever and the value of the house will increase for a very, very long time. The reality, though, is that the only reason why we think this way is because these markets are artificially pumped with new money constantly being added to the system. If we take a look at what investing is, so investing is different from saving. Investing is the act of putting money into a project or asset with the expectation of earning a financial return. The goal is to generate profits that exceed the amount of the initial investment. Here are some ways to invest: buy and sell assets, buy assets that generate income, invest in securities. Investing differs from speculation, which involves trying to get a profit from short-term price fluctuations. Investors typically look for returns over a longer period of time, such as months or years. Investing involves risk, meaning you might lose some or all of your money. Your risk tolerance depends on how comfortable you are with the fluctuations in the value of your investments and your ability to withstand financial loss. Now, you might be thinking that Bitcoin's price is volatile. You could lose a lot of money if you buy Bitcoin. Bitcoin's price could increase, it could decrease. It can go from the current price to 50% higher or lower within days. And I get it. This is really confusing for a lot of people. But you have to understand that Bitcoin is only volatile and it's acting like an investment because it's a brand new asset. It's being valued in something that can be created out of thin air. So over time, the price of Bitcoin, the price that we see in the market, will continue to rise. It'll rise forever because, again, I've said this in so many of my videos, the dollar can be created out of thin air. And over time, more and more dollars will chase Bitcoin until all of the dollar demand for Bitcoin has been fulfilled. The price will continue to rise. And I'm assuming that the dollar demand for Bitcoin isn't going to stop at $1 million. It's not going to stop at $2 million. It's not going to stop at $5 million, $10 million, $100 million. It'll keep rising because you can create dollars out of thin air, but you can't create Bitcoin out of thin air. So the people who have dollars, if they want Bitcoin, they're going to have to offer more and more dollars for Bitcoin because the amount of Bitcoin that's being sold at the current price is always going to run out. We're always going to run out of Bitcoin at the current price. We're going to see this over time. Over 4-year periods, the price of Bitcoin always rises. If we look at the average price of Bitcoin, the 4-year average price of Bitcoin, it always goes up. This chart shows you the price of Bitcoin over time. The line at the bottom shows you the simple moving average over the last 1,458 days. You can see here, the line goes straight up. It doesn't stop going up. It continues to go up. The day-to-day price, though, it's volatile. It fluctuates. It goes up, it comes down. It's based on supply and demand. If people emotionally buy and sell Bitcoin, of course, the price is going to rise, the price is going to fall. It'll continue to rise and fall. What you should be focusing on is the higher lows. Over time, we constantly see the price of Bitcoin going up because the number of people who want to hold Bitcoin forever will continue to rise forever. The amount of Bitcoin available at every single price will continue to be wiped out. The number of people who think Bitcoin is worth less from what it is today will always run out. For example, if the price of Bitcoin today is $100,000, it means that people who own Bitcoin are willing to sell some for $100,000. And over time, the number of people who have Bitcoin and are willing to sell it for $100,000 constantly decreases because the supply is finite. You can only own Bitcoin that you've purchased. You can only own a finite number of Bitcoin. And if somebody thinks that the price isn't going any higher, of course they're going to sell. If somebody wants to pay for, let's say, their expenses, if they just use Bitcoin as a savings account, of course they're going to sell some of their Bitcoin. But over time, the people at every price will run out. That's why we see the prices constantly going higher. So why is Bitcoin a savings account if the price continues to rise forever and you can make massive profits from just holding over the long term? The reason why Bitcoin's price continues to rise is because most people have no allocation to it. Most people have never even bought a little tiny bit of it. Most people have zero allocation, and all of these people are starting to buy it. Bitcoin is becoming monetized. What monetization means is that we're starting to use it for the purposes of money. So money is supposed to be used as a store of value, medium of exchange, and a unit of account. More and more people are using Bitcoin as a store of value. And that's what makes it a savings account. If you buy Bitcoin and you just hold on to it, expect yourself to look stupid for the next 3.5 years. 4 years from now, you're going to look like a genius. 5, 10, 15 years from now, you're going to look even smarter. That's because less than 1% of the world actually understands what Bitcoin is. And over time, those people who don't understand Bitcoin are going to figure it out and they're going to want Bitcoin. I've never met someone in my life who understands Bitcoin and doesn't want more. Even if they have 100 Bitcoin, even if they have 1,000 Bitcoin, they constantly want more because they know for a fact that this thing is finite. They know for a fact that this thing is going to increase in value over time. So why wouldn't they want more? If they're producing more value than they're consuming, the best way for them to save is in Bitcoin. The reason why gold has always been the best savings tool in the world is because it doesn't change over time. You know exactly what you have, and over time, you can purchase the same number of things with that gold. For example, 2,000 years ago, you could buy a fine men's suit for 1 ounce of gold. Today, again, you can buy a fine men's suit for 1 ounce of gold. Gold is a great savings account because it maintains its purchasing power. Another important concept that you have to understand about gold is that it doesn't change over time. Gold that was mined, let's say 5,000 years ago, has the exact same characteristics of gold that was mined today. That means that over time, what you have doesn't change. We can expect that it'll remain the same over the next 5,000 years. People assume that it'll be the same thing 5, 10, 15,000 years from now. So they want to buy as much as they possibly can. This is what makes gold such a great savings account. Gold is risk-free. If you hold an ounce of gold, the only risk that you have is that maybe you bought tungsten that was covered in gold. It's a tungsten bar that's plated in gold. That's a risk. But if you have 99.9% pure gold from 1,000 years ago versus today, you have exactly the same thing. The person who holds that gold has the value, and that's what makes it a savings account. Bitcoin works exactly the same way. You could have mined Bitcoin 15 years ago, and you can use that Bitcoin to pay the transaction fees on the Bitcoin network. Same thing applies for the Bitcoin that's mined today. If you own Bitcoin, it doesn't matter when it was produced. You can use it to pay the transaction fees on the Bitcoin network, meaning that you can move that Bitcoin. You can use it to either store value, you can use it to send value to someone else. It doesn't matter when the Bitcoin was created. All Bitcoin, all Satoshis have the same characteristics. So if you hold Bitcoin, you know exactly what you have. 1 Bitcoin can be split into 100 million units called Satoshis. So let's say you own 1 million Satoshis. Let's say you own 10 million Satoshis and you hold on to those Satoshis. You keep your private keys safe. Let's say over the next 10, 20, 30 years, you know for a fact that you have those private keys. You know for a fact that that Bitcoin is there. You have the exact same number of Satoshis that you had years, decades ago. The certainty that comes with owning Bitcoin is what makes it so great as a savings vehicle. Today, most people use dollars as their savings account. We have no idea how many of these things will exist in 20, 30, 50 years. On the other hand, we know exactly how much Bitcoin will exist up until 2140. Actually, for the rest of our lives, we know for a fact that there will never be 21 million Bitcoin. There's always going to be less than 21 million Bitcoin in existence. So like I said, savings are supposed to be risk-free. If you understand how Bitcoin works, if you understand how the protocol works, if you understand how the protocol is governed, you know for a fact that Bitcoin is risk-free. You know for a fact that there will never be more than 21 million Bitcoin. You know for a fact that if you store your purchasing power, if you store your energy, if you store your resources in the Bitcoin network, you know for a fact that you will never be debased. You will never have your value stolen from you. If you store your value in the Bitcoin network, if you put your resources, your time, your energy, your effort, you produce value and then you store it in Bitcoin, you know for a fact that your savings will never be debased. Your savings will never be stolen from you. You'll never be manipulated. You'll never be gaslit into thinking that corporations are the ones that are stealing from you instead of your government. This is the point of Bitcoin. Bitcoin is a savings account. It's not an investment. It may perform like an investment today because most people have no idea what it is, but over time, we're going to see that Bitcoin's returns are going to decrease. We're going to see 3 to 5% returns once we go to a Bitcoin standard. In terms of US dollars, Bitcoin's price will always increase massively. We're going to see 30, 50, 75% returns year over year because the US dollar is worthless. It can be created out of thin air. More and more dollars will chase Bitcoin no matter what. As more people adopt this thing, that will be used as a medium of exchange, a unit of account, and a store of value. And I think over time, we're no longer going to want US dollars. The entire world is going to use Bitcoin as a savings account. The entire world is going to use Bitcoin to store their value, their production, their creativity.